Good evening, traders. I say good evening, but it's actually I'm recording this on Wednesday, August the 15th at about quarter to 8 in the morning. And this is welcome to this week's midweek market focus. Um, I've done a quick presentation of what I'm going to cover. This is obviously, just to repeat that, obviously this is the midweek market focus on 15th of August, presented by myself, Adam Harris. Um, I'm going to do a quick Forex overview, followed by stocks overview, and then an analysis of the euro, just as an exercise, and obviously because we're always interested in what's happening with that. And then I have some final thoughts with regards to trading in general. So let's just pop over to my market overview page and jump across to the euro. I think what I'm going to do is I'm going to start with the US dollar, with the dollar index, and just see how that's performing against the other currencies. Let's just pull these away. Not really too concerned about the indicators at this point in time. Essentially, in recent times, looking at the daily on the US dollar, it has been creating higher highs and higher lows. We haven't actually broken our previous lows. So in general, the dollar is still strengthening, but currently it's pulling back. So just by switching on my moving averages, we'll have a look and see if this is pulling back to a particular level. So, for those of you who aren't really sure how the dollar index plays a part in the currency market, just remember that, of course, the dollar is traded against most of the currencies, and it has a massive impact. It's traded the most, in fact, so it is the biggest component of the currency market. So by looking at the US dollar strength in relation to the other currencies in the basket, we can determine how much it's, what its intentions are, where it's planning on going, what kind of pressures it's under, and and how it can probably affect the other currencies, and then we can trade accordingly. So at this particular point in time, we have a pullback coming. Price is now actually sitting on the 50 moving average. We have broken through this level, so it is very likely that it's then going to proceed and work its way up to, let's just see now, we've just bounced off to 84, which is a key level. The US dollar tends to very much kind of enjoy sort of working exactly to precise round numbers. So we'll see if it actually did a peak above that. 84, yeah, it kind of did, but it's been rejected. It's pulling back. We're going to have to see if this is going to take another run at that. And if it does take another run at that, it's probably going to break through and head up to 85, which means obviously that this is going to force the euro to pull back and head down. But this will be over the coming month. And let's just have a look at the weekly of that. So if you're not really familiar with doing this, I kind of like to get an aerial view of what the market's doing on the daily by checking the weekly as well, in terms of looking for patterns developing and just see how price action is behaving. We're really just sitting on the 10 moving average on the weekly. So, I mean, it's capable of putting all the way back to the 20, which would put it in line here with sort of 82, 81. So it has that potential to pull back a bit further and still be bullish. So that would mean that all it's doing is a natural retracement before it continues forward. So at this point, I'm not even convinced that the weekly is not a downtrend. Here's our previous low. So until we break that, this is still bullish. And at this point, there's no real reason to see that isn't going to happen. It's still making really nice high highs. And of course, we've now, think about it this, we've also broken our previous high over here. So our next kind of hurdle, based on recent price action behavior, is heading up further. So that's quite a good sign. So this is probably just in a retracement, come back down to touch on the 20 potentially, and then turn around. And seeing as this is the weekly chart, this could actually occur over the next several weeks, and then begin to reverse. So the symbol that I'm using in eSignal is DXA0. I know quite a few of you have asked how you can read that. You can only view it on the daily and weekly. You cannot see it on lower time frames, so be aware of that. Let's go across to the euro, which is often kind of a mirror version of this. And you'll see here that we do indeed have this pullback towards the 50 on the daily. It's just sitting kind of breaking through the 20. It's currently in an uptrend. Why? Because we have higher lows and higher highs. So we are in an uptrend on the daily, even though if we jump to the weekly, we are still in a downtrend. We have lower highs and lower lows. So what that tells me is that the daily is in an uptrend and the weekly is doing a phase 2 pullback. And of course, this being our previous high, I'm sorry, let me remove these lines. They're not really relevant for today. But until we see price action actually break the previous high, we are still in a downtrend. All right. Um, and I am watching the euro closely because it is sitting at key levels where it's found support in the past. It has actually changed direction, so that is very possible that the euro can ultimately reverse and change direction. This is obviously not just dependent on the euro conditions; it's also can be affected by US conditions. And so, yeah, that's something just to be prepared that that kind of thing can happen. And really trying to find an explanation for it before the fact doesn't really make sense. You'll really only see the change and then discover exactly what's causing it. Because if listening to the news helped us kind of predict what was going on, we'd all be millionaires. So we really will only discover after the fact what initiated the beginnings of the change. Jumping across the cable, this is very much ranging. I think I need to remove all the lines from this chart. This is just way too crazy. Moving averages and just take out the lines. Essentially, cable is just ranging, principally between these levels. It has a higher level that it's kind of jumping up against, but in essence, that's it. It is a ranging currency. It's been doing this since going back to sort of 2009. It tends to be ping-ponging between these different areas, and it's also actually sitting up against a resistance level, support resistance level right now. And looking particularly bullish by comparison, kind of trying to break through, trying to work its way up there. If we go down to the daily, you can actually see that this is attempting to work its way up to the top. The question is, will it be able to break outside of this range, hold? Will that support level be able to hold? And then, of course, it'll be able to work its way further up. But I think for the in the meantime, just be aware that when you're trading cable, that it has a tendency to go up one day, down the next, up one day, down the next. It's very, very volatile, and your trade should obviously not be long-term in terms of trending strategies. You just won't be able to make money on it on a longer-term basis. But certainly in terms of pivot trades and snipers, you might be able to do shorter-term trades. But in general, it's so volatile that this is something that's quite tricky. So, and as you can see on the chart, it's ranging and going sideways. There's a few other people as well that are not really aware of why the Euro Swiss mark. I'm just going to demonstrate this chart quickly to explain what this relationship is between the Swiss franc and the euro. And part of the reason why the chart is actually not is actually just moving sideways. There's a lot of traders, obviously customers of ours, who are perfectly aware of what the story is here, but beginner traders who don't quite understand why the chart does this. But essentially, since Switzerland is sort of a safe haven in comparison to the rest of Europe. It's not on the euro. It is an export country, so it depends on a lot of its economy. Depends on a lot of exporting to other countries as well as Europe. It has decided to maintain a set exchange rate with the euro. So that means that they're actually propping this up at this particular point in time, and the market is obviously wanting to. If it has a choice between euros and Swiss francs, it'll probably go for Swiss francs because it appears to be more stable. So, and the problem is that keeps pushing this downwards, and the Swiss really don't want that because that kind of their currency can't be too strong because that will hurt their export markets. So that's one of the reasons they're maintaining that, and this is going to be this way until the Swiss obviously feel that either the market will start trading in the direction in which they want, or alternatively they just feel that the situation in Europe has has stabilized. And that could happen obviously if the euro does strengthen against the US dollar, so then we would find that this would ultimately start to relax a lot. And so because of this, you'll find that the Swiss franc and the euro are effectively joined at the hips. And so what the euro does, the Swiss franc will do the opposite of. So they will effectively be mirror patterns of each other. And in many respects, that's exactly what happens in some of the other charts. So just briefly to point out the similarity between euro cable, euro sterling, and pound Swissy. So just inverses of each other, close enough, as close as damn it. So just be aware of that. So often if you enter on trades on both of those at the same time, you'll find that they might react similarly, and you might have either 2% wins or you might have a 2% loss. So just be aware of that similarity between the euro and the Swiss. And consequently, that does happen with some of the other pairs where they correlate with each other. So if I jump across to the Swiss franc, we can see that we do have high lows, high highs. This is similar in appearance to the US dollar. in this respect, because obviously the US dollar is very similar to very close to being a mirror opposite of the euro, and so is the Swissy, therefore, since they have that arrangement. So we have high lows, high highs. And we're just currently still in an uptrend. We're looking to see what happens with this, to see if this is capable of, it's obviously just pulling back to the moving averages. We'll see if it can break up above, if this can hold as support levels, and whether it wants to move on. But currently it's in a downtrend. It's doing lower highs and lower lows. The yen is a tricky one for sure. It's lovely to see it pulling up now. The yen have been trying to do the exact same thing as the Swiss, but with different tactics and on a different budget, and are trying to do the same thing. They're also an export country and are trying to weaken the yen against the US dollar. And essentially, so the Japanese would prefer to see the chart heading upwards than to see it heading downwards, in essence. And this is really nice to see the behavior of the last few days, where just looking at, there's a couple of things here. You can see that they've intervened in the past to push the price back up. They've done it several times and the market just disregarded it, and then they started a stealth intervention, sort of a series of stealth interventions, which was weakening the yen against the dollar. And then of course the market has been sort of pushing back against that. So it's interesting to see how that's become so turbulent in its pullback. And then it has tried to hit this strong support level in the past. It tried to bounce off that. It produced a high low, high high, and then immediately started to pull back to the level and is now struggling. It's all against this level, because once it breaks through to that, it then heads into intervention territory. So just be aware that when you're trading this is not really an ideal chart to trade until it starts to strengthen and head out of this. And this is a good sign to see that this is now breaking out of this little range over here. It would be very ideally what you want to see is to see it kind of break out, come back down, test the support, so that it's now broken out of that resistance, that range, come back, test it, and go long, and then trade it on that basis. But it's just not the best chart. There's not a lot of strong moves, and remember that the bias of the market is always to come down on the chart, and the bias of the Japanese is always to push it back up. So you're just going to be caught in the middle of that. Just be aware of that. Aussie dollar. Fascinating. The Australians seem to prefer to keep this at a parity level of 1-to-1 to the US dollar. But the reality is, you can see that there's a lot of strength here. It is definitely doing high lows and high highs. This is a key level. We've broken above our previous highs, especially on the weekly, and I'm watching this obviously to see if this holds. If this becomes support, then we should see a breakup and a move up to the next level, which is approximately 10750. So it'll be moving on its way up, and obviously the first key that this is held is when you start to see a series of bars that head their way up, and this trend line is not broken before that. If this trend line gets broken, even if it starts to pierce below that, that is an indication that over the coming weeks it will start to fail. Even if it attempts to move up, it will ultimately fail. So the idea being that if you do start to see it head up, and especially if it breaks this high, you should be looking for long positions on that, which would be long pivots, long bounces, anything, 20 bounces, power plays, any kind of setups that you see that you like. With regards to gold as well, there's a few other things to look at, to take into account there. The Kiwi, interestingly enough, seems to range a lot between these different levels. So we've got another support resistance area approximately here, and you can see that it goes through a lot of turbulence as soon as it breaks up to these high levels, and then it falls back, goes through turbulence. So it's not inconceivable we could hit that now, but the reality is, yes, if the Australian dollar is incredibly bullish, it will pull the Kiwi with it. Again, your clue is, what I would prefer to do is to, if I have to choose between trading the Kiwi and the Aussie, it's either shorter trades on the Kiwi, but because it's prone to this volatility and ranging, I would prefer to see it break up above that and get out of this range. In fact, I'd love to see it break out of that. So just yeah, currently this looks as though it's in quite a steady downtrend. It also looks as though the support level is not necessarily holding. So be prepared that both Aussie and Kiwi are showing slightly bearish signs. And if they don't reverse and head up, and instead what happens is they break through their support levels and then they come back to retest, you should be looking to short them. And that key thing is that support level that you see on both Aussie and Aussie and the Kiwi, which is here. So we do feel if this starts to break through this trend line, you'll see a reversal to come back up to retest, and hopefully that'll be something like a high test off a moving average, but it's enough if it's off the trend line and the support, which becomes resistance at that point, and then start to see price head its way down. Then you can immediately switch to looking for shorts on those particular currencies. Canadian dollar against the US dollar is predominantly a very choppy, ranging kind of currency pair. So just be aware of that as well. This is a tendency to go up and down, up and down. If you're going to trade this on a longer term basis, you need to have your stop quite far so that you can ride over that volatility. Otherwise, you need to be prepared to trade it on very short intraday strategies where your target is close enough that it's likely to hit your target before turning volatile. Euro cable is an absolute beauty. Absolute beauty. Very nice to see how it broke through. Let's get rid of that. Get rid of that. This is just an absolutely amazing setup to see how price can do. Still the most basic of setups. Just see how price can react to support and resistance, to a trend line, just to see how price can come back up and literally break through support, retest, and start heading down. So the question is now, of course, is prices come back up? Is price now going to attempt to come back up? Yes, it's possible that it may. I think for me the clue if it's going to continue downwards is if it breaks that line. So if we find that price over today and tomorrow starts to edge below this line, then this was simply a pullback on its way back down. And so we'll be watching for that. It's interesting though that this was a high test that formed yesterday and it seems to be disregarding that, which is very interesting. That's also similar to the euro. Let's just pop across quickly and check that with the euro. You'll see that we have a high test sitting over here and price appears currently to be ignoring that. I'm really only impressed with the high test when I see the price starts to break below it. Until that time, it seems to be disregarding that. So obviously euro Swiss is flat. Euro yen is also starting to show bullish signs as we saw on the yen charts, so that may offer opportunities to go long. We have higher lows, higher highs here, so that's quite nice. I'll be happier again to see this break this previous high, and again we'll be watching to see where is the nearest resistance level that we might encounter, which would be a previous support level potentially. Okay, so just kind of keep an eye on those different setups. We've broken past this one, so yes, we have a bit of room to run, and that's looking quite nice. So that's an idea. Euro Aussie is now almost certainly reversing. We have a beautiful W shape here, double bottom. So if you're not familiar with your patterns, you need to go back to the original K2A notes. We have a series of lower lows and lower highs. We now have price attempts, price bounces here, reverses, attempts to try again, reverses, and we have now, literally as I speak, we have pierced above our previous high. So we are now, this trend is officially broken, which means that at least on the daily, we are now in an uptrend. So in order to trade this, you now have a sense of direction. We do know that we are at least, this trend is down. We are probably going into an uptrend as opposed to ranging sideways for a while. So you need to be waiting for a retracement on that. So now that we've broken above it, price will then return down. It'll probably find itself some support, and then we'll be going long. So now that you have a sense of direction on this, you at least know which way you should be looking to trade it, but you need to be waiting for that correct entry. Euro Kiwi is also, and you can see it now, is now in an uptrend. We have a low, a high, high, low, high, high. We are in an uptrend. There is our trend. So you should be waiting for entries along this trend line. Now that you have a sense of direction on this, it's probably most likely going to be around about this area here. So wait for a pullback, potentially to a moving average or to a resistance area that will become support. Let's have a look at Euro CAD. Ranging a lot. Remember that this currency tends to range a lot. It has that personality. So similar to any of the CAD pairs have that personality type. So be aware of that. It is generally in a downtrend, but it has this horrible habit of ranging. And it's broken through some previous support levels, so that is quite bearish. I think just trade it with caution, but definitely there are obviously trading opportunities over there. Pound Swissy is still maintaining this uptrend, as far as I can tell. It still seems to be pretty happy with that, no matter which way you do it. Until we see it break through this trend line, then I'm still kind of bullish on this. And it's in the direction in which the Swiss like it, so that makes them happy. But obviously we are in a pullback at the moment because the Swiss franc is also in a pullback because the US dollar is also in a pullback, and the euro is potentially strengthening. So we have pound yen. This is just completely going sideways. So be careful with that. That means none of your snipers, or very few of your snipers, will win. You'll obviously win money or lose money. You'll win money. The market will give it to you, take it from you. So there's just a lot of that volatility in it. Just stay away from charts like this unless you have a strategy. This thing is potentially better for snapbacks. Pound Aussie, beautiful trends. Now is in a really nice uptrend. You should be looking, charts like this, you should be looking for pivots long, snipers long. As long as you see that cyclicity, to keep yourself in the safety zone, so to speak, you need to be checking your cyclicity and your high lows, high highs in your hourly chart and your 4-hourly chart. That's incredibly important to keep you on the right side of a trade, of a short-term intraday trade. But certainly the opportunities are here. I'd love to see a pullback and a couple of income generators giving us opportunities to go long. Obviously, at that point, you can also look for pullbacks to the 20 moving average, so you can do 20 bounce strategies using the master trader strategies. So there's a lot of opportunities here in terms of trending these charts. This has been historically, this has been producing a lot of money. So these are the type of charts you really should be trading those basic strategies on any of your trending strategies. Pound Kiwi, even better, absolutely lovely. It has a higher spread. I'm aware of that, but the moves are a lot bigger. So the larger moves actually compensate for the larger spread. So please be aware of that. Have a look at this. But again, same thing. There's just lots of money being made on here. We're heading up. Once we break this previous high, we're almost certainly in an uptrend, and so we may potentially have a pullback. But again, your safety net is checking the hourly chart. So as long as your hourly chart is doing higher lows and higher highs, you're in an uptrend. As soon as it starts to do a lower low or a lower high, you are then heading into a pullback. But for the moment, this is still heading up. If we go to the weekly chart, it simply tends to range between these two levels. So the question then becomes, once it breaks that, we're actually in an uptrend on the weekly, which means we're probably likely to head back up to this level. And just, that it's really that simple. So trade it as long as you can. Keep an eye on your hourly charts, your 4-hourly charts, to keep, continuing up in that. It's capable of having a pullback, but until you see if that isn't broken, then we obviously maintain that weekly downtrend. But it's most probable that we've already broken that. If we use that as a trend line, it's only 2 touches, so it's probable that it's going to head back up. Watch your support resistance levels. Here's a key support level in the past, and it's a resistance level. So if we break through that, we'll probably break through that, and then we'll head along again all the way up. So just keep an eye on those different things. But until then, you should just be trading this. Long. So this is now officially reversed. So if that's reversing, pound Aussie is reversing, Euro Aussie is reversing, double bottom. Guys, this is clear signs across the board that, they've moved for a long time. They're actually all reversing now for a pullback. They may continue all the way up, but obviously the clue in that is in the high lows, high highs. So they will just continue on their cycles. And, that safety net, as I said, and I'll say it again, is sitting in the lower time frames just to help you keep an eye on that. So, Aussie Kiwi, always an interesting one to trade. It does do these clear cycles on the daily chart, but there's a lot of volatility involved. And as long as you're aware of that and you trade accordingly, so what that means is that if you're trading end of day on this, you need to have a very wide stop, minimum 100 pips, to be able to ride over this volatility. And if you're trading intraday, you need to be using strategies that allow for that volatility. So just be aware of that, guys. These are things that are very clear when you make the effort to just look at the charts on their own without anything else. Aussie Switzy is doing a pullback at this point. We have just broken our previous low, so we are in a daily downtrend at this point, or at least what I can say is that uptrend is broken. So we're on a pullback. Let's bring up our moving averages. We're probably coming back down to test a support level. Where is my 50? My 50 is there. All right, so we'll see if the 20 holds, but it's likely that actually what's going to happen is we've just broken so far above our previous high. Let's just go further back. There we go. We've broken above that. So chances are it's actually going to come back to retest support here, which would bring it up to meet the 50. So the most likely scenario is that price will continue downwards for the next few days until price reaches this level and connects with the 50 moving average, which will be approximately here somewhere. So that's actually even possibly next week, before it then decides if it wants to continue and bounce upwards. But it's still looking relatively good. So at this point in time, I can only just see this as a pullback on the daily. If I look at the weekly, we've just broken to brand new highs. We need to see if this level holds as support. If it holds as support and we see price then returning, we are long. So all of that looks good, and of course we are long up until where? Well, we are long up until we get to, conservatively speaking, we're long until we get to there. So looking standard behavior here, pullback to the 10-day moving average on the weekly. So this is perfectly natural. This is a beautiful retracement. You can either wait for it, obviously, or if you find that you have 2 or 3 or 4 days and you start to look for income generator short, pivot short, once those moving averages correct themselves, you should be looking for signals that support this idea. So, guys, I hope you're applying the principles of technical analysis to your charts. Aussie yen is generally ranging, as you can tell. So let's go back down to the daily. And remember, because it's a yen pair, you have that kind of messiness, but it is in an uptrend. It has broken through resistance and is now, let's see if it holds support. A confirmation of that is almost certainly if it breaks this high, you are looking for longs on that, and that is long on any of your trending strategies. Aussie CAD, same thing. Looks as though it's doing a pullback. It's sitting on the 50 here, absolutely. Let's see if this holds. In terms of the weekly chart, it's doing a pullback to the moving averages here, but this is a bit of a concern. We do have a lower low. Technically speaking, we've broken that low. We haven't broken this one, so this level may still hold, and we may potentially have a reversal happening here. So Aussie CAD can range, can be very volatile, but it's looking much more bearish here than I would say bullish. And let's just have a look at a few others here. Kiwi Swissy, same thing, beautiful trending charts, guys. This is where all the money is. The money is on obviously a lot of the pairs that end with that end with Swissy and end with Aussie and Kiwi. So these are the most trending charts for your trending strategies. And just trade in the direction of the daily that you can see that's happening now. This is in a pullback, almost certainly back to the 50. Let's just see if we take a random guess here and see if we put a line in somewhere on recent, let's just see, that was a breakthrough resistance coming back to support. Does that line up with anything else? Yeah, it does. There we go. So, these are there we go. So, I mean, that was just literally just based off a guess as to where the two might collide in the previous behavior. So, let's see if this level holds. Otherwise, I might pull back a little bit further to there. Kiwi yen trying to break up through this. Let's see if it can do that. Very careful with your trades and with regards to this Kiwi CAD. Ranging, no real clear trend. It has broken the previous low. Potentially might pull back and then start to head down again. Swiss yen. All right, lower lows, lower highs. Currently in a daily uptrend, probably back up to the 50. Similar in terms of its behavior there to the euro. CAD Swissy, strong trend, lots of volatility. And obviously tends to range a lot. So again, when there's a lot of volatility, either you need to have very wide stops, you won't get much of a move on it, and you need to have your targets very clearly defined. You've got to take profits at that. Let's have a look at gold. Gold is ranging, so guys, please be aware of that. If we just take away the moving averages, and of course you can even see here that the moving averages are all on top of each other, which is an indication that the market is ranging. So what is going on here? So price action is ping-ponging between these levels. I really don't care how much you're in love with gold. You just have to be aware that it is, not really trending the way that it used to, and hopefully one day it will get back to that. So obviously, it used to trend absolutely beautifully, and it just doesn't do that at the moment, and it's currently just ranging. So the good news being that once it breaks out of that range, either above or below, and it's perfectly capable of breaking below that, if it does either way, you will most likely see a really big move. So, be prepared for that. It is looking more bullish. It is finding massive resistance here, which means the market is obviously feeling that this is just, this is just too high. So just be aware that if it fails to break through that, it will collapse until it reaches a level where more buyers step in. So probably what's happening is a lot of people taking profit every time it hits here because they just feel that they don't think it's going to go any higher. It gets too expensive. So as soon as they take profits, obviously that's just where other buyers step in and it keeps pulling back. So let's just have a look at that, and let's have a brief look at oil. Oil is now uptrending again. High lows, high highs. It's broken through out of this range and it's broken up above that. It hasn't really come back to test it, but what it has done is broken up above this next level and appears to be coming back to testing that and going long. So looking long on those, that's looking fabulous. Right, let's go and have a look at the stocks briefly. just have a look at these. We'll just do it from here. I'm going to have a look at this and compare the FTSE to a few of the other indices. This is bullish at the moment, making lovely high lows, high highs, broken over the previous high, is now broken into this channel, and is heading up towards the top. I'd particularly like to see it break above this, and that will obviously give us a really good, strong, bullish market. And we haven't been this high since, let's just put this March this year, and it'll be lovely to see it broken and see to get back up to this level where we haven't been since a year ago. So to see how that does, let's just compare quickly to the S&P, some of the other stock indices around the world. Look at this bullish, lovely high lows, high highs. It is quite choppy, but it is definitely trending upwards. So hopefully you guys are looking at long positions on this, and keeping an eye on that volatility. So with the understanding that it can reverse, it is going through these cycles. But principally, if you're a beginner trader, you should be looking for long trades on that. It looks like it's breaking through previous levels. It has this hurdle to hit, which is the previous high, so it's going to have to break through that. And we'll see if it can achieve that, and if that holds a support. If that holds, that's a good indication the rest of the market's going to go with it. Dow Jones is doing the same thing, hitting up against this resistance, but looks particularly good at like it really wants to do that. We'll see if it can break through that. The Nasdaq, same thing, is also looking incredibly bullish. Let's see, has got to just break over this little hurdle here and then work its way up to that. And of course, this has been the most bullish of the bunch this year, so it'd be very nice to see if we can just pierce that. And then we've just got the Russell 2000, which is lagging currently behind the rest of them, which is still sitting here in between the recent low and the recent high. So it may, obviously, if the rest are looking very bullish, it's very likely this is going to do this will be a late runner or a late bloomer and just start heading up through that. So in terms of positioning yourself, there's nothing worse than feeling like you just get caught on the back end of a phase one. Nothing worse than feeling like you enter here to buy, and then of course it pulls back, and then you enter here to buy and it pulls back, and of course that's the case. You need to be looking to give yourself entries on this, and the best way to do that is most probably through support resistance levels. Just in terms of price coming back, and if that level holds, you should be looking to buy at that point. So we are overdue for a pullback in terms of this, but we have also just broken through these levels. So I think that the market is more likely to go bullish now, and if it fails to break through these levels, it will actually fall back a lot further, because it's been struggling to work its way up there. So if it fails to break through that, it's gonna pull back. It's probably gonna fall back down. But until then, yeah, I should be looking for long positions on that, especially on stocks, individual stocks that are showing very, very nice clear trends upwards. Right. Let's have a look at an analysis of the euro quickly. Just wanted to take you through one of the ways of analyzing it, and I'm aware of, just in terms of time, I don't want this midweek market focus to be too long. So let's just go through this. Now remember, I know a lot of my delegates, I really tend to keep things very, very simple. The reason being, if you haven't got the simple stuff right, if you haven't got the basics right, you just, basically, if you're not consistently profitable, it means you probably haven't got the basics right. It's just an indication of that, because, you would be making money if you had managed to do that. And of course, your emotions, your psychology would be a lot in much better shape if you understand why you're taking trades and if you have some confidence in your analysis of the market. If I look at the monthly of the euro, we can just see that it's been ranging for several years. This is even prior to the Lehman's crash in 2008. So that's kind of what it's been doing. But it is capable of doing a move of approximately 2,700 pips. So just be aware it can actually strengthen to 1.5 against the dollar. So that relationship between them. So let's just have a look here. So we've got the current month that we're sitting at here. Let's see if we can just clearly identify our nearest sort of support levels that we go with. Now I'm going to pick this one. I've seen this. I can see how it's interacting here from both sides, and it satisfies quite a few different criteria for me. We can get smaller, finer level ones, but for now I'm gonna stick with that, and I'm gonna immediately head up to the next one. So I'll be basing myself on this candle here to see if that connects with everything else, and I do. I mean, I feel that it's acted as resistance. There's support here, and I can see that connection between things. So that's not bad. There's a few other. Let's see if I connect this one. I love that. There's a relationship between that and that. So I'm going to kind of stick with that, and that's sort of where we are at the moment. And then what I'm going to do is go down to the weekly and just see if there's some more detail on in terms of that. You can always, by going down to the weekly, you can check that you have those levels. You can get more details, or you can adjust those levels accordingly if you find that they're not as accurate as you want them to be. The next thing is I can see that there is a level over here, so I'll place in another level there that seems to make this one happy as well. And we can see that it's then reacting over there, coming across. That's all good. So far so good. And let's just see if there's anything else I need to be aware of. Potentially another level. Just see if we've got something over here. Is that something we need to be aware of? Potentially. Adjust this. Yeah, let's go with that as well. And yes, I would say we need to be aware of whatever's going on over here. So we've got a couple of different levels here that we can see the price is probably reacting to. So if we just, as I said to you, in terms of that, we can see that this is in a downtrend because we have lower highs and lower lows. I can actually identify those. Let's start here, for example. There's a high, there's a low. Here's a lower high, lower than that point, so after this particular arc. And here's the current low. And price is now currently sitting between this, but we're in a downtrend at this particular point in time. And it's part of a bigger, longer-term downtrend. So until we break that, until we break this previous high, we are still in a weekly downtrend. If we go to the daily chart, you can see that if we look on the recent price action, we are in an uptrend. So by putting in a trend line over here, I can get a loose sense of when this uptrend is starting to fail on me. But it is worth noting that if I look on the daily and I identify the lows and the highs, I can start with a low here, then we have an arc in price that comes down. We have a high, a low point, a lower high, a low, and then immediately price actually starts to reverse. So we have a higher high here, a higher low there, a new high here, and currently have a high low there. So we have this uptrend in the daily. And so one of the ways that I'll analyze this is by using trend lines and support and resistance, just to give me an indication of where, and moving averages, and to give me an indication of where price is likely to head to. So a number of different ways is if I employ a trend line here that seems to fit relatively snugly, and then just go back in time to a few weeks ago, just gives you an indication. This is one of the ways. So I've drawn a rough downtrend line here. It just seems to fit really well there. So we'll start with that. We're not going to use it set in stone, but you can see that we were heading down. We had just broken through. In fact, let's just go back a little bit further. Let me just demonstrate something here. That's great. We'd broken through a key level here of 1300 in the past. This was a couple of months ago. The price broke through, came down to the previous low, and broke through, just sliced through that. And so we have this high, this lower high, and a brand new low. So we're in a good, strong downtrend at that point. Price headed down. Then we see price heading up. In a short-term thing, it fails to break. That's the previous high. So this is technically still a pullback on the daily even. And we haven't broken this previous high. And then price starts to break down. It starts to even break its own lows, heading back into a downtrend, and then immediately reverses on some European news, and then immediately sort of starts to fall back down again. So it's worth noting that at no point did either of these break the previous high. And not only that, but this one actually failed to break this one, and in the process of doing that, broke the low. So all of this produced lower highs and lower lows, just confirming that the trend is down. But these kind of things, of course, even the most professional traders will get stuck out on those kind of moves because it's just there's such a large move. So we've broken down to a new low. We've also broken the previous low, heading down there. Price gets down to this trend line, so we've produced a low, a new lower high in relation to that, and we have a brand new low. And the first clue that we have a problem occurs when this bar here in particular pierces above the previous low. So there we go, which is the first time that's actually happened. So we have a break by a single bar above the previous lower high. I beg your pardon, above the previous higher high at that point, and then we have a pullback and it immediately pierces above that. So this is a very clear break of this downward trend. It's the first time we've had that. We then get price pulling back again. We're now looking to see a higher low to see that upward trend, and we get that. In fact, we get it in a single bar. A single bar actually pulls back and breaks the high of this previous one. So we now have a low, a high, a low, a low, and then we have a brand new high and a high low and a high high in a single bar. Then we have another bar and a new high. So this is very clearly starting to trend upwards, producing high low highs, and it's broken this clean downtrend line. So even if I then adjust this trend line to include, let's just say we want to include this data, we still have an attempt for it to pierce through that. So even if I then go ahead and do that, so in other words, if I'm as lenient as possible and I just keep adjusting my trend line outwards, we still appear to be getting breaks above that. Okay, and this is currently where we're sitting. So for me, I'm seeing this as still in an uptrend on the daily. I will not really relax until I start to see it break the previous low, and then I would go back into euro downtrend and start shorting it. But until then, I'm pretty much long the euro. We have a high test today, and currently, if we look at the daily on this chart as well, we can currently see visually that the euro is currently right now disregarding this. By the time the midweek market focus is online about 8 hours from now, it'll be, there'll be a much clearer picture as to where the euro is sitting. But certainly, if price has broken above the high of this little high test here, it's still bullish. If it has done it at that point. If, on the other hand, it has started to break below and has started to pierce this trend line, then I would say we are possibly looking at an actual reversal and a continuation into a downwards trend. So bringing on my moving averages so that I can have a look at that, you'll see that in terms of the daily, we're just bumping up against, we've broken above the 20 and the 10. The 10 has actually crossed above the 20, which is an interesting sign in itself, and we're bumping up against the 50. And if we go to the weekly, you can see that we're currently just pulling back. We're still sitting on the 10. So, we're quite capable of moving up to the 20. And if the other thing is, if we're in an uptrend in the daily, then we need to determine where are we in terms of the downtrend on the weekly. And the downtrend on the weekly actually is still over here. So it's very capable that we're in a phase, we're actually doing phase 1s, phase 2s on the daily upwards. Meanwhile, on the weekly, we're just doing a phase 2 pullback. Excuse me, phase 2 pullback to this trend line here, which actually, interesting enough, then puts us in line with resistance levels up here, support resistance levels. So it's quite capable of pulling all the way back up here and then reversing, and it would still be a downtrend on the weekly chart. So just be aware of that. The weekly chart has to do its phase 1s and phase 2s. And in fact, if it did that, it may well come down, it may well bounce off the 20, high test off that 20 moving average on the weekly, and move down, and it just would not be at all that strange to traders to see that happen. And of course, it could go a bit further and hit the 50. But at this point in time, we must treat the daily in an uptrend because we've seen it in high lows, high highs, and we must treat the weekly as though it's in a downtrend, but it's a phase 2 pullback until such time as we see it break that previous high. So we have a pullback here. Most likely turning point is approximately in this area because it would line up with the trend line, it would line up with the 20 moving average, and it would line up with resistance areas, support resistance levels. So that's the most likely continuation back down into a downtrend for the euro, and it'll just carry on down to another level. And of course, the beauty of that is that if it does maintain that, it will then fail to break the previous high and it will continue into a downtrend. If, on the other hand, price pierces above the previous high, we are then in an uptrend in the weekly, which implies a much longer term move. Okay, so just be aware of that. So these are the kind of levels we're looking at. On the weekly, we're looking at our previous high. On the daily, we're looking to see that it maintains this trend line. It's possible that it could reverse, but I think it's a bit too soon. I think that it has broken this daily trend. I've moved out this downward trend line to give it a lot more. Potentially it won't break above this 50 moving average. It'll start to head down. But for me, the confirmation of that comes when it breaks this low test, the bottom of this low test over, if it does it early, sort of before the end of this week or early next week, it would have to be a big move down. Then I'm just quite easily sort of shift back into selling the euro. But until then, I'm looking for long positions because I can clearly see high lows, high highs, and just trade it up to these levels here and just watch how it behaves as it gets to these support resistance levels. And that's it. So that's the analysis of the euro there. And let's have a look. Final thoughts. Very simple. No single trade makes you a millionaire. A lot of things when you begin to trade, you think, okay, if I can just maximize my risk on this one single trade, ride it as long as possible, this will be the one that takes my account from £5,000 to 50 or to 100,000. And that just isn't the way that trading works long term. And besides, you got into this game because you want to do this, you want that lifestyle and you want to do this for a while. So just have that patience. You will get good trades, but no single trade. Will make you a millionaire. Your account, your trading account is the sum of every single one of your actions, which is either, it's your losses combined with your wins, combined with your stupid trades, your greedy trades, combined with your disciplined trades. So your account is basically a reflection of your behavior and your approach to trading. Your approach to trading is your choice of behavior towards your trading. So your aim is to become consistent if you aren't consistent already, and obviously then to stay consistent. So that's kind of like adapting to, if you're a smoker and you decide you want to quit smoking, it's not just quitting the smoking, it's then staying off smoking. If you want to eat healthy, it's finding the right diet and then maintaining that diet for the rest of your life. So and obviously you will adapt it and tweak it as time goes by, but the whole point is it's not just becoming a different person to where you are now, it's staying a different person, and just breaking that transition from to becoming that person is the hardest part. So just be, that's just normal. That's what everybody goes through, and that the prize is what you get for that. Trading to become a trader is incredibly hard. But it's two things. It's your technical analysis, and it's then how you emotionally handle your trades. And those are two different processes that you need to work through. But one thing is finite, which is your technical analysis. You can definitely master that. And I think that once you master that, you will find as a consequence your emotions will be a lot better, because you'll understand why you're taking a trade, where you need to watch out for things, where the speed bumps are, and a lot of that, it just happens. It's cause and effect, and you mature along the way. But you need to have some kind of, it always feels like we're in quicksand, or we're on sand at most points when we're learning how to trade. And so we want some kind of solid ground, and solid ground is your technical analysis. You need to do that. So you need to spend time with your coaches to get your technical analysis down, and you will find that everything else falls into place after that. Pay attention to your risk and your stops and your profits, all of those. Obviously, keep your risk consistent. That's the one thing you definitely have a choice of keeping consistently. And pay attention to your stops and your profits, because believe it or not, success in trading and the building up of your accounts over time comes from both successful stop management and profit management methodologies. So you need to have systems in place as to a set of rules where you manage your stops consistently, every day the same way, and also take profits. You need to take profits. So once you get those systems in place, those habits in place, you'll find your trading starts to turn around. So you can change strategies a lot of the time, but you will find a groove where you like, what, I know that if I manage my stop this way, if I move it every day, or if I move it behind every second seller's bar or behind every second buyer's bar, there's different types of systems that you can find out from your coach. You'll find that's one system, that's one thing you can now cross off your list. Make sure you never risk more than 1%. That's another thing you can cross off your list. Then you have to have systems where you take profits. You just take profits. If you're up 3%, you take 2%. If you're up 1%, you take 0.5%. So you're always banking profits. And obviously settling on in terms of a strategy, an end of day strategy, which all of these things, it's an known unknown. So you don't really, it's an unknown unknown. So you don't really know where those things, you just wouldn't know. How would you be able to define your trading routine if you don't really know what strategies you can use? So a lot of that stuff stems from a technical analysis. And once you have your technical analysis down pat, everything else just becomes crystal clear. And a lot easier to manage. So, I wish you all the best with this. Have a really good week. There's some good trading opportunities. Make sure you stay on the charts that are trending nicely or presenting really nice, clear signals, and stay away from the charts that are incredibly choppy and are ranging, unless you have range trading strategies. And that's really it. But again, I ask you, if you're not consistently profitable, it implies you do not have the basics in place. You need to go back to the basics. All right, guys, I look forward to hearing from you, and just have a great week. Don't forget to keep calm and carry on trading.